Okay, you're with us here on a fresh new edition of Closing Bell, last hour of trade coming up. We are coming to you from the CNBC-TV18 News Online studios. I'm Prashant. With me, my colleagues Rima and Surabhi here in the studios. Guys, hi. Good afternoon. And Nigel is joining in on the newsroom floor as well. Nigel, hi. Good afternoon. I mean, you know, that interview with Mr. Puri, of course, was a pleasure to listen to. And go along. But I just want to quickly take a quick look at the Nifty as well. The markets which have come off actually, which have climbed down quite a bit. We just have we were up 0.5% and now there's only about 50 odd points left. So gains actually have been cut in half on the index. We're at about 19,392 as things stand right now. So, you know, when we just even 10 minutes back, we were just trading under the 20-day moving average, which was about 19,452. I mean, the levels remain the same. It's just that with this, 0.25% odd fall we've seen, there is some more distance to cover up to the 20-day, which is 19,452. Above that, you know, that 19,500 is a level which I think comes into play. It's basically where the Nifty will meet the falling trend line. Bank Nifty is also cooled off. Maybe it's cooled off a little bit more while we were listening to that interview with Mr. Puri, but Bank Nifty is now in the red. I mean, yeah. So it's cooled off from the day's high, now substantially even more. Support around 44,450. And we are, by the way, just under that 44,450. That's an hourly support, by the way. So we are under it, or maybe just around that. Resistance for the Nifty Bank is 45,312. I mean, same level for the last couple of days we've been putting out. That's the 61.8% retracement of the fall from the July high to the August low. But the broader market, right, that is the one which has been firing, and I think we'll spend a fair bit of time looking at those indices. There also, I think there has been a little bit of drop-off, but nothing as compared to the Nifty or the Bank Nifty. The small cap index has got more than 1% gains, and the mid cap index is up 0.75%. So, that's the part of the market which is up and away. We've been jokingly calling it, 0.5% compounding on the small cap index, and it's not a joke anymore. I mean, actually, it's the returns have been phenomenal and daily, consistent returns, which is unprecedented. Rima.
Hi, and no signs of profit booking yet, at least, in the mid-cap or in the small-cap index. But just, look at the Nifty Bank. The Nifty Bank has slipped close to 350 points from the day's high. The culprits are HDFC Bank. That's down in the red now. You've got State Bank of India at the day's low with a fall of more than 1%. ICICI Bank has extended its fall, and that's down close to about 3/4 of a percentage point. By the way, on the Nifty now, forget the 50-day moving average. It's 20-day moving average. It's below the 50-day moving average as well. The Nifty 50-day moving average, which we were contending with yesterday, is now at 13,397. So with that last hour fall, the Nifty is now even below the 50-day moving average, and of course, even the 20-day moving average. But in the broader markets, one stock which takes the breath away is Gokuldas Exports, right? Yesterday up 20%, and I think it's followed it up with another, 17-18%, and massive volumes.
Rarely does, I think, an acquisition cause this kind of an immediate re-rating, and a massive one at that. And this is after when they acquired this company. And the market's extremely happy with the price at which they've acquired it. They've paid less than the annual sales figure. It's less than one-time sales. And perhaps, the synergies that are being spoken of, the market has quite a lot of conviction in it, so 16% up on that stock. I just want to point out, as Prashant was saying, that was a very interesting conversation with Mr. Puri. He did say, on the issue of OMCs, he did say that he's quite confident that OMCs have conducted themselves very well. First quarter has been brilliant in terms of profits, and he thinks this will continue into the second quarter. But again, no hint whatsoever of any support coming in future in case crude prices start running away, given the fact that there's this LPG price cut. So that's caused some uncertainty on the stocks, and that's playing out on that entire pack. So that's one area which is negative. Otherwise, in the mid-cap market, things are really flying around. I'll just take some names here. Take a stock like Uflex, up 20% right now. Look at Spark, Sun Pharma Advanced Research. Not a name that pops up on the screen every day, but it's got price and volume action around it. That's Uflex today. 20% circuit going on that one. A couple of more names. Lemon Tree has been active. Indian Hotels is putting on 5-6%. So a lot of the hospitality stocks are up and about. Anyway, there's a lot of buzz in and around Delhi and NCR. It seems hotel rooms are chock-a-block over there as people head for their holidays, as the G20 has ensured that there's at least a public holiday of sorts, a school holiday, and some, private offices also being shut. So anyway, hotel stocks doing very, very well. A short point, the mid-cap market is very buoyant. Large caps range bound as usual. We've been in a 400, 500 point band for all of this month of August. That hasn't stopped investors and traders from making money, has it, Nigel?
Today was a perfect opportunity actually for the bulls to make a comeback because the Indian markets were underperforming this week. But that wasn't to be. And the problem is the largest part of the market is not performing, which is the Nifty Bank. But as you all said, the broader markets, well, plenty of gainers. I don't even want to start naming a few, but just Gokul Das, yesterday when market opened, we made this point that the acquisition will add close to around 40%, 35 to 40% to their existing pad. The stock is up close to around 40% also. Rational or not, but the street clearly believes that this is a good acquisition. They're potentially going to be nearly doubling their revenues, and they're buying the asset at half times price to book. So tick marks all over there. But let's find out how do you trade the final hour of trade. We have Mitesh Thakur who's back with us. Well, Mitesh, we thought this was it. I mean, we'll see a good close today. It had the ingredients of a good session, but profit taking from the top yet again. Your take.
So, definitely, I think profit taking has happened also the fact that we have started trading below 19,400. So we've reduced our long exposure. Very clearly, this is a market which is yet, I think, on a broader basis still remains a contracting market. And therefore, I think, abrupt selling, abrupt profit booking, I think is very likely in this market. So you have to be slightly nimble when trading. But I think, trading with stock-specific buys, I think still remains the most favored choice. And I have a buy on Hindustan Copper. I think that's a stock which had a gap of opening is seeing good follow through. So buy here with a stop at about 152 and a target of around 170 can be looked at. And Container Corporation of Concord is something also on the list for me. That's a buy as well with a stop at about 674 and a target of 705.
Okay, all right, got that, Mitesh. Thanks very much. We will come back to you in about half an hour and get some more trading ideas in place. But for the time being, let's address one other news story that's been quite important today. In the Zee Sony Puneet Goenka case, SAT, the Securities Appellate Tribunal, says that it is not satisfied with the time taken by SEBI, that's the market regulator, for investigations. Yash has been following all the proceedings today. He's joining in with the details. So, Yash, what happens now?
Well, it should be day one of the second edition, so to say, with respect to the legal battle between Puneet Goenka and market regulator SEBI. And as far as today's hearing is concerned, there were two demands which are made by Puneet Goenka. One, of course, market regulator SEBI has been questioning, on charges of money laundering and round tripping on certain transactions which took place between Zee Entertainment and other SL entities. Puneet Goenka stating before the court that these transactions are not just book entries, but they were genuine transactions. The company has had relations with these other SL entities for years, and there is complete substance as far as business substance is concerned in these transactions. The second argument which Puneet Goenka's counsel made is that market regulator SEBI has said that they'll take 8 months to complete the investigation into these suspicious transactions. But at the same time, SEBI cannot keep Puneet Goenka out of office for 8 months when he's supposed to be the managing director of the merged entity between Zee Entertainment and Sony. The court acknowledged this particular argument, that is Securities Appellate Tribunal, stating that SEBI taking 8 months for this investigation is way too long, and SEBI just cannot continue with this long period for investigation. The demand from Puneet Goenka was to get an interim stay on market regulator SEBI. Unfortunately, no interim stay was given, but of course a timeline has been specified by Securities Appellate Tribunal when it comes to giving the final order. SAT has said that SEBI is expected to file a reply to Puneet Goenka's arguments within the next 3 days. After that, on September 7th is when SEBI is expected to file a rejoinder to the same thing, and finally final order in this particular matter on September 8th.
Okay, thank you very much for joining in. Hemang Jani is with us on the show now. Hemang, the stock has re-rated in the last, I think 2 months or so. Pull up a 3-month chart, and the stock has rallied from levels of about 170, 175 to 266. How would you view the prospects of Zee Entertainment? With Puneet Goenka, if the order comes in favor of him, where does Zee Entertainment go? And what if, in the base case scenario, Puneet Goenka is unable to head the company? What happens then to the stock?
Yeah, good afternoon, Rima. I think we've seen a very smart recovery in Zee stock post the clear-cut indication that the merger will surely go through, and the only point that remains to be seen is whether Mr. Puneet Goenka will be allowed to remain as the CEO of the merged entity, and that matter is going on, and one doesn't really know how long it will take. But the way I look at this is that a section of the investors and the shareholders were actually looking out for the exit of Mr. Puneet Goenka, and they were of the view that it's good if you have a board which has slightly better, corporate governance standards, and the benefits and the synergies of the merged entity will be visible over a period of time. So I think this matter by itself is not something that one can consider as a negative for the stock. I think after this entire merger, the way the synergies are going to build out, particularly on the OTT platform and the kind of content that they have, I definitely think that Z is a great entry point at this point of time, and one can look for a target of about 320 over a period of time.
Okay, Hemang, stay with us. Lesser talked about name, right? Shakti Pumps, which is basically in the field of solar pumps for agricultural use, is flying in trade. It's actually locked up the last I checked. Yes, it is 20%. They've received an order worth about 360 odd crores from the Haryana government. Surabhi is here with details. Surabhi.
So much for that. So as you said, they have received an order under the Kusum 3 scheme from the Haryana Renewable Energy Department for close to 7,800 pumps, and the work order is for 358 crores. Now, Kusum 3 scheme has been in the works since 2019, and there were some delays due to COVID. But in Q1 FY24, in the management did say that in March 2023, the Solar Energy Corporation had sanctioned the release of tenders of nearly 9 lakh pumps, and they had started receiving the letter of empanelment from various states. Now the company expects to start the execution of these pumps from the month of September, and they anticipate a monthly installation capacity of nearly 10,000 to 15,000 pumps. In the next 2 years, they see this opportunity size growing to 1 lakh pumps, and for that they have the manufacturing facilities and the working capital on their books. So on the basis of that, they expect a 20 to 25% revenue growth for FY24 and EBITDA margins of 10%, which they haven't seen in the last 3 fiscals. So Kusum 3 orders is a big growth trigger for Shakti Pumps.
Okay, thanks very much for that, Surabhi. Hemang, do you track this one, Shakti Pumps?
Yeah, I think it's a very small company, about 1,600 odd crore market cap. And the last year, client was hardly about 1,000 crores. So this was always an important trigger for the stock, where if they get this kind of an order, which is almost about 360 crore, which means almost about 35-40% of their current top line. And the operating profit margins also for this category of products is much higher than what they're doing. So you might see some short-term excitement, but typically in a year twice you will see this kind of news, and then people forget about it. So if somebody has a high risk appetite, it may provide a short-term opportunity, but we don't cover it in detail, so no record from my side.
Hemang, do stay on. Need to slip into a very short break. On the other side, we'll invite Shibani Sirkar, Korean of Kotak Mahindra AMC on the other side. Stay tuned.
Well, blame it on the bank nifty once again. The cut is about 0.25% on that index, and the pressure is showing up on a few names. Check out something like an ICICI Bank, Axis, SBI. Actually, most of them, these big bank boys, they are now trending on the lower side of the screen, or just close, getting closer to the flat line. That's ICICI already down in red. Axis is now looking at a fall as we speak. Hemang Jani is still with us. Hemang, obviously the talk of town has been oil marketing stocks with everything that's happened in the last 24 hours, right? And there is some pressure on them between 1 to 2% lower today. You heard the minister, I'm sure. What do you make of this space? Has the overhang returned, or can you still remain a buyer?
I think after last quarterly results where these companies delivered reasonably good growth, what has happened is that the crude prices really moved up. Secondly, in an election year, now going by this recent trend of this LPG subsidy, where these companies will have to bear the burden of 200 rupees per cylinder. We have seen time and again that in an election year, a government tends to be slightly more, populist. And in the process, you may have to really deal with the situation where these companies will not be allowed to increase the prices in case the prices go up. So I would certainly stay away from this pack, at least for the medium term till elections are over.
What about Gokuldas Exports? It's up 35-40% after it's announced the acquisition. Do you see it headed to 4 digits? It's, I think, at 850. Can it go up to levels of 1,000? Is there more upside in the stock?
Say that, Rima, I think this acquisition, the pricing is considered to be good, and given the fact that the company had grown by more than 100% last year, both in terms of top line and profitability, with this acquisition, I'm not too sure if there is going to be a significant increase on a higher base. So yes, because of the valuation being attractive and maybe the synergies, people are getting excited, but I'm not able to, correlate that with the way the stock price has really moved up.
Okay, that's Gokuldas, indeed quite a stunning mover over the last couple of days, and overall it's been a good mover for the year, but especially over the last few days. Okay, we have our colleague now, Vivek, joining in. Okay, in a bit we'll have Vivek joining in, talking about the outperformance in the broader market. As we're getting to that data, Hemang, let me ask you, it's been a sizzling move, sizzling rally, 25% on the index, a lot more in individual stocks. So where do you still see scope? Defense, railway, something like Gokuldas Exports. I mean, we're talking triple-digit returns already. Where would you put fresh money in mid-caps?
I think some of the cement companies is where there is going to be a good amount of action. Because of the way this quarter has been, where the input price pressure has eased, the dispatch growth has been good, and post Sanghi acquisition, there is also possibility of couple of more M&A plays being laid out. So I think it would be good to look at some of the mid-cap cement company with JK Lakshmi, LCL Industries, India Cement. I think that is the space where there is be a fair amount of action from, let's say, short to medium-term perspective.
Okay. As the broader market continues to outperform, let's just put the spotlight on some movers, right? I mean, small is beautiful, and smaller, the more beautiful. Vivek is here with exactly that space in focus. Vivek, over to you.
Well, thank you so much. Especially in the last month, we've been highlighting how the broader end of the markets, mid-cap space, small-cap space, stocks from the Nifty 500, how they've outperformed, and they've outperformed quite significantly. In fact, in 2023, the outperformance has been quite stark. Just in terms of the index movement itself, the individual stocks have moved much higher. So mid-cap index up 24%, small-cap up 25%, Nifty 500 up 10%, versus just around 7% as far as the Nifty itself is concerned. But let's have a look at some of the gainers, when you're talking about today's trading session. And in fact, if you're looking at names in today's trading session, have a look at names like Uflex first. When you're talking about Uflex, this particular stock has gained 23% in this particular week itself. Today, on the back of an upgrade from HDFC Securities, BSE is up almost 7%. Pokerna, this particular stock, up almost 9.5% in the session. Other stock that we are tracking is Sun Pharma Advanced, stock up 16% in just the last couple of trading sessions. And when you're talking about Singer India, this particular stock up just 2% today, but in the last 5 trading sessions, the stock is up over 30%, in fact 32% higher in just the last 5 trading sessions. Apart from that, last couple of trading sessions, we've been talking about how the agrochem space, agriculture stocks, chemical stocks, and that entire basket has been outperforming. So look at names like India Pesticides, this particular stock up 30% in the last 3 trading sessions, Neogen Chemicals and 10% in 3 days, and Bodil Chemicals, again another stock which is up 18% in just the last 3 trading sessions. Some of the stocks that we are highlighting today because of very strong volume action, Sharda Motors, up almost 11% in the session, Mahindra Life Spaces, this particular stock up 4.5%. Typical, when you're comparing it to the typical 5-day, 10-day average, very strong volume seen over here. And 2 names from the border markets, Visakha Industries and Asian Granito, home improvement team, these stocks too are buzzing, doing very well. Some stocks that we are highlighting today, seeing a bit of correction, Jupiter Wagons down at the lower circuit, and Electronic Smart. Both of these stocks have seen stellar rally, but today seeing a bit of profit booking from the higher levels.
Okay, all right, Vivek, thanks a lot for that. Well, let's take the discussion forward. Shubhani Sirkar-Kurian, Senior EVP and Head Equity Research at Kotak Mahindra AMC, joins us on the show. Hi, Shubhani, always good to see you on the show. Well, let's get straight, instead of talking about the headline index, let's talk about the mid caps and the small caps. Big run out there on a day-to-day basis. We have this joke out here about compounding. You miss one day, maybe you miss 0.5% on the index itself, and stocks, they're doing 5, 10, 15%. Do you think things are getting overheated out there?
Hi, Nigel. Always a pleasure to be on your show as well. So when you look at the mid cap and the small cap segments, clearly we've had a stellar rally over the last few months. And if you look at today, where valuations stand, where mid caps and small caps vis-a-vis large caps are concerned, valuations are clearly looking stretched. So if you look at various parameters on valuations, mid and small caps, we believe, are now getting into territory where even on their own relative history, valuations are looking on the upper side. And therefore, at this point in time, while structurally, if you have a view of mid and small caps over the next 4 to 5 year period, yes, one should be looking at mid caps. Near term, however, this is going to be a market incrementally where one should be careful in terms of the kind of stocks that one invests in. So bottom-up stock picking is likely to become even more important. Focus on companies with strong balance sheets and cash flows and companies with low leverage, because at this point in time, our belief is that versus large caps, mid and small cap valuations are looking stretched. And therefore, this would be a time to be somewhat cautious in the near term where mid and small caps are concerned, especially in terms of the kind of stocks that you pick for the portfolio.
Shivani, hi, afternoon, Prashant here. But, I take that last point, which is that relative to large caps, they've probably become, the gap is closed, right? But what you said earlier, that relative to their own valuation. So I, about a week ago, looked at mid-cap index valuations relative to its own past. So I looked at 3 points. So right now, 1 year forward, Nifty mid-cap index P multiple is about 23.5 times, right? The last time we made a significant high on the mid-cap index was October 2021. Back then, P multiple was 33.5. This is all Bloomberg consensus. 33.5. We're at 23.5 now. And the very significant top which was made in the mid-cap index before that, before October 2021, was January of 2008, after which there was a long slump. Back then, the valuation was 24.5. So, and these are high points, right? I mean, these are meaningful tops for the index. And so, I mean, yeah, prices have run up, but is it looking crazy expensive?
Yeah, so, what I take your point that, there would be certain points where valuations would have been higher than what we are trading today. But when I'm talking about valuations, I'm looking at an average over the last 10 to 15 year period. So when you look at valuations for both mid-cap index as well as small-cap index over the last 10, 15 year average, 1 year forward price to earnings, currently we are above long-term averages. So that's number one. The second is how do you gauge greed and fear in the market? And when you start looking at participation vis-a-vis large caps and mid caps, we are coming to a point where markets are possibly getting into that greed zone where incremental participation is moving more and more towards mid and small caps, of course aided by flows as well as the fact that earnings delivery has improved over the last few years. So what we are really saying is if you look at incrementally and valuations between the three segments of mid, large, and small. Valuations, while on the large cap, valuations are not cheap either. However, large cap valuations on a relative basis seem to be better placed. And even within mid caps, there are still pockets of opportunity. It's not that the entire mid cap segment is overvalued or overheated. However, one should be incrementally cautious in terms of the kind of stocks that go into the portfolio while mid and small caps are concerned.
Shivani, what about this entire risk about the rural economy slowing down further because of what we've seen on the back of a monsoon deficiency in the month of August, the fears that September is also going to be fairly weak? We were hoping the rural economy starts picking up, the distress eases, but do you think that this throws a spanner in the work? And is there in any way we need to alter one's portfolio to account for this scenario?
Yeah, so the monsoons going into deficiency in the month of August has been a drag where the rural sentiment goes. And, incrementally, just before August, we were starting to see signs of improvement, especially where the rural economy and demand goes. And even in terms of real rural wages had been moving up. However, we still have to wait and watch. While August as a month has seen deficiency in rainfall, remember the entire rural income is not only agri income. There are a significant part of the rural income which comes from infrastructure related activities, and therefore the infra segment has been improving, and therefore the rural wages which comes or is linked to the infra activity has been fairly stable and buoyant. So that's number one. And the second is while monsoons have been deficient, we have to see what is the impact of it in terms of the overall Kharif output and therefore in terms of the agri related wages as well. So it's still wait and watch. While you're right that at this point in time, the bottom of the pyramid demand has not revived in a big way. Demand continues to be largely more premium, and that's what we are seeing across segments. But I would not write off the entire rural recovery as yet.
Okay, that's on the rural piece. Shivani, hi, good afternoon, Surabhi here. Yesterday the newsroom was abuzz because suddenly all these chemical company stocks were up and about. Even some of them, even today, we're seeing some excitement over here. But I guess the logical question is that is it just some, bulk chemicals in China which are seeing a little bit of an uptick in prices, or is this indeed the first sign that the cycle itself is bottoming out? I don't know if you've applied yourself to this as of now, too early. What thoughts on the sector overall?
So if you look at the price movement that we are talking about and the recent uptick that we have seen, possibly some of that recent uptick is because of capacity shutdowns in China, and that has resulted in the near-term price movement. But if you just take a step back and think about chemicals, what has happened over the last year has been two factors. One, global demand has slowed down, and that has impacted the sector. And secondly, there has been inventory destocking plus dumping from China, which has resulted in prices getting impacted. But when you look at different segments and pockets of the chemical sector as such, what we believe is that the growth outlook in terms of the specialty chemicals basket remains fairly strong. The sector continues to be a beneficiary where the China plus one strategy is concerned, and therefore any incremental market share gains for India should translate into growth, especially where specialty chemicals goes. And therefore we believe that possibly in the second half of the year or maybe closer to Q3, Q4, you should see some of that demand come back, especially on the specialty chemicals side. Also, a lot of companies within the space have invested in capacities, and therefore that shows that there is a long-term runway for demand which is still intact. So overall within the chemicals basket we have been fairly constructive on the specialty chemical space, and that continues at this point.
Okay, Shivani, we'll leave the conversation here for now. Thank you very much for joining in. Enjoy the rest of your day. We'll get into a break. On the other side, we'll tell you what Dealing Rooms is saying in our segment D Street Chatter, and we'll also get you a few technical trading calls.
Welcome back. A bit of a party pooper right now with the Nifty Bank because the Nifty, well, we raised all the gains. We're trading in the red, and the Nifty Bank intraday chart should come up for you on the screen. That's down 250 points. And we have two large constituents, HDFC Bank as well as ICICI Bank. The intraday chart tells you the picture. They're putting pressure on the Nifty Bank as well as the Nifty. So a weak close actually is what we're likely to see. But Nimesh, tell us, what are you picking up in D-Street chatter? We thought this was it. We're likely to see a good session. But very disappointing, actually, by the end of it.
It looks like the bank Nifty is disappointing, right?
Yeah.
I mean, and I'll give you a bit of feedback on the banking flows as well. But broadly, the index has been consolidating. But look at broader markets. That's the space. There is so much of action. There's a party out there. A lot of stocks are moving and all. The small cap index is up 1%. Mid cap index is up 0.75%. So actually, it's not about the index, but broader markets today, which are doing good. In fact, even in terms of flows, it's very, very stock specific. That was a feedback in the morning as well. There is no directional sectoral flow in today's trade. It's very, very individual stock specific moves from the larger FIs as well. Even in the banks, well, the bank Nifty is sharply fallen off. But in terms of flows, I understand there are small initial buy flows in the private bank stocks. Even in HDFC Bank, well, the stock is down today. After a long time, I'm sensing a bit of buying flow in HDFC Bank as well. So, contrary to the screen, there is a bit of small buying from larger FIs in the private bank stocks. So that's the overall feedback. Even as I said, while the index looks flat or maybe it's down a bit in the last half an hour of trade, there is massive breakout in the small cap index. And that's where it looks like this party is going to continue. The momentum is very, very strong in the broader markets.
All right, Nimesh, but as you said, plenty of action in the broader market. So let's talk about a couple of stocks and what are you picking up out there?
So in terms of individual names, the first stock on my list is BHEL today. Big mover of late, and even in today's trade, that's moved up on good volumes as well. I guess the city is now anticipating a large order win for BHEL very soon. So that's the reason why the city is excited on BHEL of late. So that's the first one. The second stock is Shriram Properties. Even that's buzzing in trade today. But in Shriram Properties, watch out for a very large block deal, which can happen very soon. In fact, I understand the private equity investor is likely to completely exit, selling its entire stake in Shriram Properties. So that's the second one. The third stock is Voltas. This is one stock which is quietly moving up from the recent lows. And every now and then, I keep getting a feedback about some bit of buying interest back in Voltas from larger institutions. So looks like there is some genuine buying now in Voltas at lower levels from the larger institutions. And the last stock is Adani Transmission. Again, a quiet stock, not much done in that particular stock as well. But in terms of flows, I understand a long-only fund is quietly accumulating from the open market into Adani Transmission as well.
Okay, interesting list. As always, Nimesh, thank you very much for that. I just want to pull up one name, Cosmo first, right? I mean, if you can have that up. It's one of those huge underperformers. And that is up 15% right now. The films business for the company has been underperforming for a while. And of course, they have this interesting pet business as well. I mean, pet care business as well. But 15% out of the blue. And I was kind of pointing out these other names yesterday, which are down and out, but it's almost as if, sabka number aayega. It's like, it's almost taking everybody along. Slowly but steadily, out of the blue, you're seeing these movers emerge. So that's an interesting one. I thought I should quickly point out. Mitesh is with us with a quick check on things. We're about 14 minutes away from close. Mitesh, the close is going to be flattish, slightly lower. What do you make of it, and what should one do?
In fact, as I mentioned, Prashant, below 19,400, no points taking up long positions on the index. So index is squared up. But on the stock side, HPCL is something, which is closing weak with a gap down today. So let's say STBT with a stop at 260 and look for targets of around 252 here. And JK Cement is a BTST with a stop at 3275 for targets of 3350.
Okay, by the way, since Prashant mentioned Cosmo, and I looked at the other packaging stocks as well. It's like a packaging party going on today, literally.
Uflex and the other.
Yeah, look at Uflex, you pointed out. There's Cosmo. Look at something like Ester Industries. Look at Jindal Poly, Huhtamaki Industries, 4.5%. A lot of these chemical / packaging stocks, plastic packaging stocks, having a quite a session today.
Actually, Vivek was telling that there's some HDFC Securities note. So maybe we'll have Vivek come up and talk about what they're saying. But I think that note is about Uflex in particular. Maybe there is something about the industry as well which we can kind of gather.
Absolutely. Well, on that note, let's actually go forward and look at some of the MSCI changes. We do have, in fact, Vivek in for that, not on packaging per se, but on some of the index changes that will come into effect tomorrow. Vivek, fill us in.
Well, that's right. On August 11th, we had told you about how MSCI had gone ahead and announced the list of stocks that would be added to the MSCI Global Standard Index. All of these changes will happen in tomorrow's trading session, and this is a net inflow event as far as India is concerned. Almost $1 billion of inflows will come into India in tomorrow's trading session. Which are the top stocks that we have to keep an eye out for that will become part of the Global Standard Index? Astral, expect inflows of close to $176 million here. Cummins India around 178. Ashok Leyland over $200 million. IDFC First Bank over $200 million. HDFC AMC over $150 million. Both REC as well as PFC close to 190 to 210, and Supreme Industry over $177 million. On the other hand, ACC will be removed from the Global Standard Index. Close to $98 million of outflows will be seen from this particular name. Apart from that, even in the MSCI India Domestic Small Cap Index, quite a few changes will be made. 41 inclusions and 2 deletions are announced in the MSCI India Domestic Small Cap Index. Lastly, regarding the Adani stocks, in this particular index review, there will be no changes made. MSCI will defer all of the changes of the Adani Group stocks to the next review, and after that, they will give an update on that particular group.
Vivek, thank you very much for that. Get into a short break. On the other side, Mayuresh Joshi will also join in.
Welcome back. You're with us on Closing Bell. Mayuresh Joshi is with us in the final leg of the show. Mayuresh, thank you for joining in. Let me throw at you what is moving the fastest right now, and that is these bunch of packaging stocks. After a long time, your Uflex, Cosmo Films, all these stocks are suddenly bursting on the charts today. I don't know, fundamentally, anything new that you've noticed? Otherwise, irrespective of today's moves, what is your overall call on the packaging boys?
Afternoon, Survi. I think 2-3 things that were plaguing the industry as a whole. One, I think the excessive supply factors that were coming through, because a lot more units were coming through, both within India and outside India as well. And with that context, I think the pricing, both for BOPET and BOP films, was expected to be showing a downward spiral, which it did in the previous few quarters. To add to that, the input cost inflation that we probably seen, specifically from crude oil derivatives, did not help these companies, because it was just a partial pass-through that was probably happening, and that was taking a hit in terms of the margins. Now that crude prices have probably stabilized at this juncture, the expectations in terms of the inventory that they're probably holding, the high-cost one, should have got liquidated. And with new inventory expected to come through at a relatively lower cost, sequentially, input cost inflation should not probably play out. At the same time, I think the supply factors that we are probably speaking about, looking at how conditions are being driven across the globe in terms of demand and in terms of expectations of how volume growth will be, I think some of the supply chain issues in terms of capacity additions might have taken a backseat, which might propel existing players with better backward integrated capacities and facilities to probably show some uptick in their realizations as well. So to that extent, I think Jindal, to that extent, if you probably look at Cosmo or even a Polyplex, I think some of these stocks are probably should be moving in anticipation of these triggers working in there.
All right. Hi, Mayuresh. Good afternoon. The other big mover as we speak is Escorts. The stock is up nearly around 9%. Yesterday, my colleague Sonia, she broke the story that they could be looking at selling their railway division. Now, the street has read it positively, but what's your take? Because out here, the margins are the best, close to 20%. ROC is, I think, upwards of 45%. They're also sitting on a good order book. But I think the message that's coming from the parent is you only concentrate on the core business, not on railways. That seems to be the reading. Your take? Stock is up 9% now.
Afternoon, Nigel. No, absolutely. I think the order book, as we speak, stands close to 1,100 odd crores. Better margins compared to their other divisions as well, including the tractors and the construction equipment division. And therefore, I think the piece that is probably moving might be based on this news. But the expectation, again, outside the tractor business, the railway business is expected to grow in double digits, driven both by new products that they're probably introducing and also the export part of the business. And that, again, in my opinion, with localization, should show even better margin improvement as we head into FY24, FY25. The construction equipment part of the business is expected to grow between 10 and 12%. And the margins will expand further with expectations of more infra-related orders coming in this segment as well. For the core tractor segment, I think the expectations of mid-single-digit growth based on increasing MSP prices is what my anticipation is over the next few months. Reservoir layers have been pretty resilient, and that will probably mean that the Rabi season should probably be starting on a good footing. And the expectation in terms of Kubota adding into the excavator side of the business and the export front there as well will probably improve further in terms of margins for the consolidated business as well as free cash flow yield. So I think there are a lot of triggers based on which this stock is probably moving.
Some of these real estate companies are moving now. So Prestige Estates is up close to about 6%. Keystone Realtors, which is known as Rustamji, when they develop the building, that's also higher in trade. So there is some activity that you can see in those. Prestige moved up and now slipped a tad bit. The other one is Keystone Realtors, 4.5% higher in that. Mayuresh, afternoon. Wanted to get your thoughts in on oil marketing companies. Till the entire election is out of the way, how would you view OMCs? Is it a avoid?
Yes, and I think, Rima, afternoon to you as well. I think that is what the house call has always been. I think it is subject to too many regulatory and government changes that probably happen as we move along. State elections, general elections, what you've seen as a precursor in terms of the LPG pricing mechanism, the expectations in terms of petrol and diesel cuts also playing out, might weigh heavily in terms of how their balance sheets might probably play out. So on the marketing side of the business, as far as OMCs are concerned, you're definitely going to see some element of pain as this year probably progresses. On the refining side, there is some respite because what we had seen in terms of the correction of Singapore GRMs, you've seen Singapore GRMs come back quite smartly, and therefore the refining part of the business might hold up. But generally, I think with the overhang that always persists in terms of regulatory actions, even if the dividend yield offers to be very, very attractive, as does the cash yield for these stocks, also the valuations compared to the rest of the pack, I think this always supersedes in terms of what actions might actually take a detrimental hit in terms of earnings. So I think we normally avoid OMCs in our portfolios.
Avoid normally and avoid during, special circumstances as well. Well put. Mayuresh, we'll leave it there. Thank you very much. Good speaking with you. Appreciate you joining in with all of that perspective. It's always a pleasure. You got the market, which is going to end absolutely flat, and we're just kind of counting down. 2 minutes to go for close. We're at about, 19,350. So this is a far cry from, what the market was doing early on. So the high today is 19,452. By the way, 19,452, which is the high today, is the 20-day moving average. So you basically hit the 20-day, and then it's been southwards. Pretty much since 11:30 was the day's high, which was the 20-day, and then the market did nothing till about 1:30 or so. 1:30 onwards, basically a sharp slide lower is what we've seen. The Bank Nifty ends a full 0.6% lower. Again, the correction there started at about 130-ish, and that's been the poorer of the two indices. But guys, broader markets, no such problems, and continuing to party on.
By the way, I just want to draw everyone's attention to European markets. European markets were expected to open higher given the Wall Street rally. But right now, Europe is firmly in the red. The CAC is down 0.8%. The DAX is lower by 0.6%. And there is some economic data which has come out of Germany where imports have fallen 13.2%. That's imports. For year to July, that's from January to the month of July. And this is the sharpest drop since 1987. So there is some concern about economic growth over there. So Europe is currently down more than about 0.5%, extending up to 3/4 of a percentage point. A quick run through of the large cap action. Well, oil marketing companies led by BPCL under pressure. HPCL2 down close to about 2.5%. Banks sold off quite vigorously. State Bank of India, ICICI Bank, Kotak all in the red. And on the gaining side, autos led by Maruti Eicher, IT, Infosys, HCL Tech, and some green on the screen seen for Tata Steel too.
Okay, yeah, metal stocks, till the sell-off happened, they were pretty much the best of the lot. Anyway, just some names from the broader market worth mentioning. We've been talking about Gokuldas Exports, 15% up today, taking the winnings of the week to 40%, and we're just 3 days old into the week as such. Other than that, of course, some of the hotel stocks, like we pointed out earlier, Indian Hotels, Lemon Tree, good session, 5-6% gains on some of these names. Zomato, after that block deal, where SoftBank is the likely seller, 5.5% up on that stock. Good day for Jio Financial Services, about a 5% circuit on that one as well. And then packaging companies and chemical companies. On chemicals, Bodil Chemicals was the one that stood out today. And packaging, of course, you name it and they were up, from Cosmo Films to Uflex to Huhtamaki and many more. Big move on a lot of the packaging stocks today. So the mid-cap market, continue to be in the green. Didn't mention the shipbuilders, by the way. Another super sizzling day for the likes of a Mazgaon, Garden Reach, and some of these names. So shipbuilders once again up and away. Great day for the mid-cap market. Lackluster and a little disappointing for the large caps.
Well, with that, we're out of time and closing bell. Don't go anywhere. Our special offering, Weekender, comes up next.